The following program is furnished by The Truth About Your Future, LLC. The views expressed do not necessarily reflect the views of this station. This information is education and not financial advice. Consult a financial advisor before investing.
The Truth About Your Future with Rick Edelman is brought to you by Bitwise, the world's largest crypto index fund manager, and by Global X ETFs, dedicated to providing investors with unexplored and intelligent solutions, and by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100, and by Edelman Financial Engines. Rick Edelman is a board member, consultant, shareholder, and client of EFE, but EFE is unaffiliated and has no say over the content of The Truth About Your Future with Rick Edelman.
This is where technology, innovation, and personal finance come together.
This is The Truth About Your Future with Rick Edelman.
And now your host, Rick Edelman.
It is The Truth About Your Future. I'm Rick Edelman. On today's show, how universities are saving money at your students' expense, the latest on municipal bonds, the college dropout rate, NFTs and the metaverse, the growth of CBDCs, and this week's health and wellness segment by my wife, Jean Edelman. Welcome to The Truth About Your Future. You know, I'm a big critic of college and the college cost and the challenge of getting our students the education they need at a price that they can afford. Now we've got new data from the Chronicle of Higher Education. A third of college students are thinking of dropping out. Faculty say a third of their students are absent from class or not participating when they're there. 76% of students say they're suffering emotional stress. That's the reason they're talking about dropping out of school. The rest say the coursework is simply too difficult. If you've got a student in college, you need to talk to them about their attitude about college. Are they thinking of dropping out? That could be $50,000 down the drain for you if they've done so. Universities, meanwhile, are trying to save money, lowering the cost of attending college. Hundreds of schools, including Vanderbilt, Berkeley, and UNC, they're now hiring companies to create and teach classes without the students knowing that they've been outsourced. These online education companies use .edu email addresses of the universities to recruit students into their courses. They also get phone numbers with university area codes. Are you sure that the tuition dollars you're paying are resulting in your student getting taught on campus by an actual member of the university faculty? Or are you being bamboozled? You need to talk with that university and that college to make sure you really understand who's teaching what to your child. Our institutions of higher education are not always delivering what it is we think we're paying for. I'm Rick Edelman. This is The Truth About Your Future. Hey, you looking for cheap clothing to buy? The Gap is now selling hoodies for $2 to $11 each. Oh, but you can't wear these hoodies. Well, you can't wear the hoodies, but your avatar can. Yeah, these hoodies that the Gap is selling for $2 to $11, they're digital hoodies, and they exist as NFTs, non-fungible tokens. So your avatar can wear these hoodies when they're playing video games on your behalf or when you're cruising through the metaverse. Oh, and how about the Doge Vodka? This is a new NFT. Yeah, Dogecoin, Doge Vodka. Well, now, yeah, your avatar can get drunk on Doge Vodka. Oh, by the way, when you buy this NFT, you can also get drunk in the real world, because when you buy the NFT, you get the one-time right to buy a real physical bottle of this brand new vodka for $20. This is an illustration of how the digital world and the physical world are beginning to morph. The metaverse, in fact, is going to be so big, McKinsey says it could be $5 trillion in value by the end of this decade. Everybody's getting in on the metaverse. NASCAR, Wendy's, Nike, Gucci, JP Morgan Chase, they're all jumping into the metaverse. JP Morgan is America's biggest bank. They just signed a 1-year lease in a virtual shopping mall. It's located in Decentraland, a 3D online world. The branch office has a virtual lounge with a teleport to the second floor, screens with videos on topics such as digital assets, a white paper about the metaverse, a library full of books, and a scholarly owl. And how about this? Meta, used to be called Facebook, and Microsoft, and a bunch of other tech giants have all gotten together to form a brand new industry group to develop standards for the metaverse so that everybody's digital worlds will be compatible with everybody else's. It's called the Metaverse Standards Forum. It includes some of the biggest companies in the space, from chip makers to gaming companies, as well as the World Wide Web Consortium. One company's missing, though. Apple has not yet decided to join that effort. But the fact that this forum has been created is going to assure a seamless activity in the metaverse. As you go from one program to another, your avatar will be able to move around seamlessly, easily, inexpensively, and it's going to make the experience a whole lot more effective for everybody. I'm Rick Edelman, and I'm here to tell you, if you're not involved in NFTs or the metaverse, you will be before the end of the decade. The metaverse, NFTs, they're the future, and that's why this show is called The Truth About Your Future. Let's head off to Visalia, California. Ken is with us on the phone. Hey, Ken, how are you?
I'm doing well, Rick. Thank you very much for asking. I hope you're also doing fine.
Indeed, I am. Thank you for calling. How can I help you?
Well, I was curious. Been involved in 401ks for quite a number of years. Early mid-'80s, shall we say, and here lately the talk of precious metal IRAs has been of interest to me. So I dipped my fingers into that. You know, perhaps with the economic climate and the political climate, I'm just kind of curious, is it safe, secure? Should I maybe think about, taking it on the chin and pulling my stuff out, taking the penalties? So, you're a pretty smart guy, Rick. So I'm interested in what you have to say about this.
Well, tell me, Ken, what's your motivation in doing this? Why pull the money out of the IRA and pay all those taxes? What's the benefit of doing so?
Well, if there is, if I've got that gold in hand in a safety deposit box, of course, because of the size, but maybe perhaps if we have an economic collapse, I would have, I'd have some to trade. I know that's very extremism, mm-hmm. But, and frankly, now that I think it through while we're talking, I would dare say that if you advise, Ken, go ahead, do that, you're really thinking things are going to turn around bad.
Yeah. So, okay. So let's frame all this. You give me a good perspective on it all. So let me tell you what I think. First of all, gold certainly does belong in a diversified portfolio, just like any other asset class. So no problem to owning gold. There are several ways to go about owning it. You can buy the bullion directly. You can buy gold coins that are issued by the U.S. government, the Canadian government. Other governments issue gold coins. They're 99.9% pure gold, and they are worth pretty much whatever the value of the price of gold is at the given moment. That's very different from collectibles or rare coins. Now you get into numismatics and a whole different breed. And when you see these late night TV infomercials that are touting gold as a safe haven and so on, and you want to stay away from that nonsense. It's a hassle to own gold directly because it's a physical asset. You've got to, once you get it, you have to figure out where to store it, right? Because like any other valuable asset, you don't want it to get stolen. You don't want it to get lost. And this is why a lot of people buy a gold mutual fund or a gold ETF, and they buy gold for you. They also invest in gold mining stocks, companies that are mining for gold. The value of the mining stock is often relative to the price of gold. And this way you have a liquid security that you can buy and sell whenever you wish, and it's as simple and easy as any other ETF you would own in your portfolio, where you could have daily liquidity, and it's pretty simple and easy to own, and you don't have to worry about the safekeeping. The downside, of course, is that you just have a security, and if there is an economic collapse and the government shuts down the stock market, well, you're not going to be able to get your money out of that either. So there's no perfect place to do this. My personal preference would be to buy gold mining stocks or a gold ETF. I think that's the simplest, cheapest, most convenient way to go about doing it, even though it's not a direct holding of gold. Keep in mind that you shouldn't be buying it simply because of the current economic scenario. We're in a period of high inflation, high interest rates, and people say that that's when gold prices rise. That hasn't been universally true in the past 6 months, so that theory isn't always valid. I wouldn't own gold for that reason. I would own gold simply because you should own every asset class. You should own gold, sure, but you should also own oil, and you should also own commodities. You should also own crypto. You should own all this stuff as part of a diversified portfolio.
Very good. Thank you, Rick. I appreciate it that you took some time to talk to me and hear my question.
Well, it's my pleasure, and I really appreciate your calling, Ken. That was Ken from Visalia, California. You can do what he did. You want to ask me a question? Just send your question to askrick@thetruthayf.com.
Allow us to introduce you to Jeremiah, an ordinary person who helped shape the future by putting his money behind the right ideas. Jeremiah's always been a numbers guy, from his days competing in the high school math league to now as the teacher who leads it. Jeremiah is also accessing the companies who are driving environmental innovations for the next generation by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a helioseismologist to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
This is a call to the self-starters, to the self-made, and the self-sufficient. It's time to declare a new kind of independence, because Edelman Financial Engines is here to provide tailored investment solutions for your kind of wealthy. You should expect more from your wealth advisors. Our investment management approach is based on Nobel Prize-winning research, and our planners don't sell products to earn commissions. And because we're here for those who question the answers, we model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. So no matter where you're going next, see what we can build for you. Call 833-301-4333. That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines, built for those who built themselves.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
This is The Truth About Your Future. I'm Rick Edelman. Well, one of the most popular investments for years has been municipal bonds. because muni bonds are issued by state and local governments. They're often guaranteed by those governments, and the interest is tax-free. So what's not to love? And to answer that question, I'm very happy to bring onto the program Stephanie Larosiliar. She is the head of municipal business strategies at Invesco. Stephanie's been with Goldman Sachs, Brown Brothers Harriman, and JP Morgan Chase. Stephanie, really glad to have you on the show with us today.
Thanks, Rick.
When inflation goes up, interest rates go up. When interest rates go up, bond prices go down. What's been happening in the muni bond market this year? What do you see, more importantly, happening to muni bonds for the rest of the year?
So after a record 2021, the muni bond market had $102 billion worth of inflows. We were riding high. Things felt really good. Wasn't too much volatility in the market. When we got to the top of the year, we didn't expect that to change very much, but we were in for a surprise. We had the beginning of an outflow cycle that will be historic. This outflow cycle has surpassed the 2013 taper tantrum, 2020 coronavirus, and we're now at about $80 billion worth of funds year to date out of muni mutual funds. And right now it's feeling like we're in a steady as she goes, slightly upward movement in terms of muni momentum. So we're feeling actually pretty good about the second half of 2022.
So you gave a couple of numbers that I really think are worth highlighting. You said last year there was over $100 billion of inflows into muni bond funds at Invesco, where investors were very happy with where interest rates were, and they were throwing money into these funds. And then more recently, there's $80 billion of outflows as investors are unhappy. So that's, to me, a classic buying high and selling low, isn't it? Investors doing the wrong thing at the wrong time for the wrong reason, as usual.
Yep, that is exactly what we saw. And so no one paid attention to the increasingly positive fundamentals. Illinois got upgraded by Moody's, got upgraded by S&P for the first time in over 20 years. No one's paying attention to that because they're still stuck on the physiological part of the hierarchy, where rates and inflation are just overpowering the system, so much so that the value in munis is really being overlooked.
Well, you raised something really important about Illinois getting upgraded. Everybody's focusing on interest rates and interest rate risk. When interest rates go up, bond prices go down. But when it comes to bonds, there's more than just interest rate risk. There's also credit risk. Bonds all get a rating. They get a AAA rating, AA, single A, triple B, double B, single B, all the way down to D. By the time you're down there, you're in default. Investors don't pay a lot of attention to this, but as a bond's credit rating changes, so does the value of the bond. So talk about that.
We're actually seeing a 3-to-1 upgrade to downgrade ratio. So we're seeing for every one bond that goes down a notch in terms of its credit quality, we're seeing 3 get upgraded. So when we think about the flow of funds, the flow of capital coming into the municipal market, it actually is unprecedented. It's the most that we've seen since the muni market's been, we've been keeping record of this. And so what should be happening is the bond prices should be going up because the credit is actually better. However, interest rates, inflation, Ukraine, Russia, all of the macro concerns have really just overpowered it. And folks have really not been paying attention to the tremendous value that's been built here.
So in other words, your analysis says that on a spreadsheet, the muni bond market's looking pretty good and prices should be rising, but instead investor sentiment and psychological attitude is causing the prices to be going down, and this is creating a mismatch in the marketplace.
100%. That's exactly what's taking place.
So what's it going to take to fix that?
We just need stability at this point. We need inflation to stop ticking up. Interest rates going higher, unfortunately, is a necessary evil.
Well, there are, what is the size of the market now? 70% of all muni bond buyers are individual investors. And these folks, as you pointed out, do care about their income, they care about safety, and they care about taxes. So ordinarily, you would say, gee, that's wonderful news for municipal bonds. It's a natural audience that wants to buy that product. But the bond market isn't seeing that benefit, as you noted. What's it going to take to turn that around? Do we have to wait for interest rates to go higher to the point where investors become confident that there aren't going to be any more interest rate increases? Because at the moment, the Fed's made it pretty clear they're going to raise rates another 1 or 2% before the end of the year. So should investors continue to sit on the sidelines or readjust their thinking? What is it investors ought to be doing now regarding munis?
At this point, it feels like the rest of the Fed moves are priced into the Treasury market, which means they are in turn priced into the muni market. The one oddball that we can't really figure out is inflation. And if the Fed can tame inflation, I think that will be the catalyst that folks need to be comfortable re-entering the market. Because at this point, it doesn't matter where you put your money, you're losing 8.6%. You put it under your mattress, it's not $100 anymore. You've lost 8.6% of that. So we definitely believe that, it's going to take for inflation to be tamed. We hope that the sentiment of the retail investor shifts. I mean, we know that the retail investor tends to be very emotional in terms of the reactions, which results in that buy high, sell low. And we'd love to just make sure that folks know what's happening from a fundamental perspective. And let's not forget that a lot of the tax cuts that were put into the 2017 Tax Cuts and Jobs Act will start to sunset over the next couple of years. So, as it relates to taxes, those are not going down. We don't know if they're going up, but we certainly know they aren't going down. So tax exempt income should definitely be more attractive.
So it really is a time for investors who would ordinarily be thinking about muni bonds to be getting good, effective advice to determine, should you keep the bonds that you've got? Should you add more? Should you sell? What is it you should be doing relative to your own circumstances? And there's really no substitute for advice. To get information about the muni bond market and the investments that Invesco offers in municipal bonds, you should go to Invesco.com and you'll get a lot of great information right from them. That's Stephanie LaRosiliere here on The Truth About Your Future. Stephanie, thank you so much for joining us on the show today.
Thanks, Rick.
Thanks for being with me here on The Truth About Your Future. Have you signed up for my new master class yet? Financial Planning in the Age of Longevity. It's online. It's free. Sign up now. You'll discover why, if you're alive in 2030, you'll likely live to age 100 and beyond. Will your money last as long as you do? My new masterclass teaches you how to handle college and career, homeownership, long-term care, estate planning, and of course, your investment strategy. Register now for free at thetruthayf.com. That's thetruthayf.com. Stay with us for more here on The Truth About Your Future.
This message is brought to you by Charles Schwab. No matter what tomorrow brings, some things won't change, like Schwab's commitment to see the world through clients' eyes. That commitment is why Schwab is always here for clients with clear guidance and committed service to help maintain focus on achieving long-term goals. So whatever happens today, Schwab remains invested in you. Visit schwab.com to learn how Schwab is ready to help.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities along the way. But where to start? At Global X, we have spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these disruptions are now part of our daily lives, like fintech and telemedicine, others are making their impact felt behind the scenes, or perhaps under the hood. Think of the lithium batteries that power electric vehicles, the rise of hydrogen fuel cells, or renewables like solar and wind, which are becoming increasingly cost competitive. All of these themes represent vital components of a next-generation green energy economy that is more reliant on innovation and less dependent on fossil fuels. Learn how you can add these and other green investment themes to your portfolio at globalxetfs.com or ask your financial advisor.
You're listening to The Truth About Your Future with Rick Edelman, sponsored by Choice. Choice is changing the way Americans save for retirement by making it possible to invest in Bitcoin, crypto, and other alternative assets inside your IRA. That's right. Whether you open a deductible or a Roth IRA with Choice, you can invest in Bitcoin and 22 other digital assets in your retirement account. You can also buy stocks, mutual funds, ETFs, gold, real estate, and more, all in a single retirement account. There's no hidden fees or account minimums, just more control over your retirement savings. And Choice makes it ridiculously easy to combine all of your old retirement accounts with a rollover concierge service. So if you've switched jobs in the last few years and have been putting off rolling over your old 401k, make sure you check out Choice. Head on over to retirewithchoice.com/Rick. That's retirewithchoice.com/Rick.
listening to The Truth About Your Future. I'm very happy to welcome onto the program my friend Michelle Muhammad. She's Director of Financial Planning at Edelman Financial Engines, 20 years of experience in the business. Michelle, good to see you again. How are you?
It's great to be here, Rick. Wonderful to see you as always. Thanks for having me.
You know, it's as much fun as we're having being here together. It is not a fun year. This is the worst year for the financial markets since the 2008 credit crisis. And this has one similarity in particular to 2008. Pretty much everything everywhere is falling in price. The notion of diversification isn't paying off in 2022. The old adage, diversification reduces your risks. Some assets will rise while others are falling and so on, really hasn't been playing out terribly well. People with a so-called diversified portfolio, the classic 60-40, 60% stocks, 40% bonds, hasn't really done very well. People don't want to lose any more money. What are you telling your clients who say to you, I don't want any more losses? What are you telling people?
Well, first I say, I understand. I really get it. I completely understand how you feel after 21 years of being a financial planner and having started in 2001, which was not a great year for the market either.
Boy, talk about bad. You've had bad timing since the beginning.
Actually, I look at it, maybe I'm the eternal optimist, but I look at it the other way around. I think I'm a greater asset to my clients, having been through 2001, 2008, even 2020 and everything in between. And before 2008 came along, I used to say to folks, hey, I started in a bad year, which means that I understood almost from day one what it's like when people are getting closer to retirement, when they're looking at their accounts going down and they're saying, what's going on? What can I do? How can I protect things? So going back to what you were saying, if someone says to me, how can I protect my portfolio, et cetera, I remind them that as a fiduciary, I need to tell you what's in your best interest, okay? And therefore, oddly enough, what's in your best interest doesn't always feel the best. It doesn't always feel good, and I completely get that. I had a client recently mention to me, she said, we followed your advice. We were putting 15% away in our 401ks. They had been doing 0. And she said, Michelle, it's like it evaporates. It just disappears. And I said, I give you kudos because that's hard to do. It's hard to stick to it and keep putting money in when it feels like it's just going away. But here's the thing, when you look at the alternative, what would we do? Would we go to cash?
It's funny, if you put the money into cash, you're guaranteed to be losing 8 or 9%.
Absolutely. Not only that, I mean, if you factor in the impact of inflation, it's like, in the 60-40 portfolio doesn't seem to be working. But in the long run, it does.
So that's the basic message you're giving is hang in there. This too shall pass. We need to give it the time for that to occur. That's the basic message. Yes?
I would say so. And I mean, it's a boring message. I mean, you know this better than I do, Rick. You know that in 2008, the S&P 500 dropped 52% in 17 months. It just felt terrible, and then speaking of when I started, if you look at March 2000 to October 2002, that was a similar loss in the S&P 500. I understand how you feel. I get it. But I've seen it happen over and over again. And then having a guide, having someone on your team, I'm here to help my clients through this.
It's hard to have a long-term outlook when you're being bombarded on a daily basis by headlines. Your basic message, hang in there. This is long-term. We need to recognize that every declining market and economic environment of the sort we're in now eventually works itself out. That's easy to contemplate when you're in your 30s, 40s, 50s. But what do you say to people who are solidly in retirement and who are watching their account values fall 10, 20% so far this year?
That's an excellent question. And the truth is, every day I have that conversation because I have quite a few clients who are in retirement. And the great thing about what I and my colleagues do here at Edelman Financial Engines is that we build a plan. If somebody is in retirement and living off of their investments to supplement Social Security, maybe a pension, whatever the case may be. Very often, the right answer is that we've built it into your plan. We should stick with the plan unless your time frame has changed, your risk tolerance has changed. There have been other financial factors that have changed. If something has changed, then we should look at things and see. And very often what I do is I pull up the plan and I remind them, hey, we've talked about this.
And so everything you're saying makes perfect sense to those who have as good a financial advisor as you. You've set expectations. You've warned them that markets go up and down, not merely up. You have made sure that they have a plan they're going to be able to live with for a long period of time, and that they're going to be able to survive during negative environments such as we're in right now. That's wonderful, and I would expect nothing less of you, Michelle, and the benefit that your clients are receiving. But what about people you meet today for the first time who haven't had the benefit of a Michelle Mohammed, who haven't had the benefit of dealing with an advisor at Edelman Financial Engines, who are now finding themselves shell-shocked at the amount of losses that they have, who never thought that they could lose so much money so quickly, who never thought that they could lose so much money from the bond portion of their portfolio, the portion of the portfolio they thought was the safe part of the portfolio. And yet they want to retire next year. And they're wondering, am I going to be able to? With all of the losses I've suffered so far this year and all of the losses everybody is projecting are going to occur through the rest of the year, can I still retire next year? What do you say to these folks?
Excellent question. So the first response is, if you haven't been working with a financial planner, then it makes sense to consider sitting down with one to get an evaluation of your situation and take a look at your portfolio. Is it diversified enough? Have you been rebalanced? Most people, even the smartest, most well-educated people and the savviest financially speaking people, are not necessarily as diversified as they think they are. And they're often not rebalancing because they're busy doing other things.
We're talking with Michelle Mohammed, who's Director of Financial Planning at Edelman Financial Engines. And if people want to get that plan, lay out that timetable, figure out if they're in the right direction, how can they reach you and your colleagues at Edelman Financial Engines?
So you can visit planefe.com/TAYF.
And I'm sure folks will take advantage of that opportunity. Michelle Mohammed, Director of Financial Planning at Edelman Financial Engines, here on The Truth About Your Future. Again, that web address is planefe.com/TAYF. Michelle, thanks for joining us.
Thanks for having me, Rick. It's always great to spend time with you.
I'm happy to tell you that my latest book, The Truth About Crypto, is getting rave reviews on websites everywhere, Amazon.com and elsewhere. The book debuted at #1 at Amazon, and it's being now a worldwide success. It's now being published in Portuguese, German, Vietnamese, Italian, Turkish, and now we've just sold the publishing rights to China. The book is being published by the China Translation and Publishing House. This publisher is owned by the Chinese government. And here's the ironic thing. China has banned Bitcoin. And yet the Chinese book publishing company is publishing my book on Bitcoin. Not too much irony there, huh? And check this out. The book has 31 tables, lists of companies that help you invest in Bitcoin and other digital assets, lists of news services, accountants, attorneys, and other services that help you manage your crypto investments. The Chinese publisher is deleting all of these tables from the Chinese version of the book. Yeah, they're censoring. Why? They say they have to be deleted. They say these tables and lists have to be deleted from the book because mentioning them would be in violation of China's advertising law and regulations. So there you have it. China bans crypto, publishes a book about crypto, and censors the book in the process. Only the Chinese could behave in that way. Still, 1.4 billion people in China. Wonder how many of them are going to read The Truth About Crypto. You can read it in English and get the entire book, uncensored, including all 31 of those lists. I'm Rick Edelman. Thanks for reading The Truth About Crypto.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities along the way. But where to start? At Global X, we have spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these disruptions are now part of our daily lives, like fintech and telemedicine, others are making their impact felt behind the scenes, or perhaps under the hood. Think of the lithium batteries that power electric vehicles, the rise of hydrogen fuel cells, or renewables like solar and wind, which are becoming increasingly cost competitive. All of these themes represent vital components of a next-generation green energy economy that is more reliant on innovation and less dependent on fossil fuels. Learn how you can add these and other green investment themes to your portfolio at globalxetfs.com or ask your financial advisor.
This is a call to the self-starters, to the self-made, and the self-sufficient. It's time to declare a new kind of independence, because Edelman Financial Engines is here to provide tailored investment solutions for your kind of wealthy. You should expect more from your wealth advisors. Our investment management approach is based on Nobel Prize-winning research, and our planners don't sell products to earn commissions. And because we're here for those who question the answers, we model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. So no matter where you're going next, see what we can build for you. Call 833-301-4333. That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines, built for those who built themselves.
You're listening to The Truth About Your Future. I've got good news for you if you're cheating on your taxes with crypto. Well, okay, that's a little bit weird way to talk about this story. But anyway, if you are cheating with your taxes with crypto, you're going to be able to cheat a little while longer. You're not supposed to cheat on your taxes, but quite frankly, it has been relatively easy for people who have been buying Bitcoin and other digital assets to cheat on their taxes for the very simple reason they haven't had to report their gains and losses on their tax return the way that you have to do that when you buy stocks and bonds. I mean, when you buy and sell stocks, your broker sends you and the IRS a Form 1099. And that tells the IRS all of your transactions, the gross proceeds from your buys and sells regarding your stock trades. And that means the IRS has a copy of the 1099, so you better report that info on your 1040 as well, because if you don't, the IRS will know that you're not. And this is kind of why tax compliance with stocks is pretty high. But crypto exchanges don't issue 1099s. They don't have to do that. And since they're not issuing a 1099, they're not telling the IRS about your trades. It's solely up to you to tell the IRS, and you do that when you fill out your tax return. If you don't report your trades on your tax return, the IRS won't know. unless, of course, they audit you. And that's probably pretty rare that will occur. So a lot of crypto owners, some of them didn't know they had to report their taxes. After all, you figure, if I don't get a 1099, I don't have to worry about it, right? Wrong. Just because you don't get a 1099 doesn't mean you don't have to report it on your tax return. You do. So some folks don't know that they have to. Others who know it have taken advantage of this loophole. The fact that these new crypto exchanges, which frankly didn't exist 5 years ago, don't issue 1099s because the law doesn't require them to. Well, you figure, gee, since they're not telling the IRS, why should I? It's an easy way to cheat. And so last year, Congress passed a law requiring these crypto firms to issue 1099s. And they said they've got to start doing this in 2024, which means you've got this year and next year before this rule takes effect. Well, the Department of the Treasury and the IRS have now just said they're going to delay that rule. The reason? They're creating a new form for crypto exchanges to use called the 1099-DA. You can guess what the DA stands for, digital assets. And it's taking the government a while to figure out this form. What is it they want to ask for? How do they want you to report the data, etc.? And they're not going to have it ready for the 2024 tax year. And as a result, if you've been cheating on your crypto, you're going to be able to cheat for a while longer. This is the truth about your future, a future that might include jail time if you don't follow the rules.
It might not seem like a big deal because, I'm like a pop singer or whatever. It's like, it still hurts to write a check when you didn't we were laughing. Everybody was laughing because when I signed my tax returns this year, I had to get completely wasted. I was just they were just holding me up. I just couldn't even, it's unbelievable.
I want one bourbon, one scotch, one beer, one bourbon, one scotch, one beer.
Everybody has to pay taxes. Even businessmen that rob and steal and cheat from people every day. Even they have to pay taxes.
Speaking of which, do you think that you could give me my $20,000 in cash? My concern is that this might bump me up into a higher tax brand.
Let the bears pay the bear tax. I pay the homer tax.
When I signed my tax returns this year, I had to get completely wasted.
I was born this way. I'm on the right track, baby. I was born this way.
Glad you're with me here on The Truth About Your Future. The Central African Republic has just launched a CBDC, a central bank digital currency. They call it the Sango coin. It and Bitcoin are now recognized cryptocurrencies in the country. Meanwhile, the Treasury Department here at home has issued a press release calling on the United States and its foreign allies to work together to create standards for crypto regulation. The notice said the U.S. must be a leader in the discussions on CBDCs and digital payment programs. And the Bank for International Settlements, it's not really a bank, it's really an association of all of the world's central banks, like our Federal Reserve. They just created an innovation hub. Their first project, a cryptocurrency platform. Clearly, on a global scale, crypto is becoming mainstream, and we're going to see countries all around the world launching their own central bank digital currencies. It's expected by the end of the decade, virtually every country in the world will have one. Our own Federal Reserve is hard at work on one. And everybody seems to acknowledge it as a given, and frankly, with a lot of good reasons for it. But there's one organization that doesn't like the idea, the American Bankers Association. They've written a letter to the Commerce Department opposing the idea of a U.S. CBDC. They wrote, quote, "The issuance of a CBDC, a central bank digital currency, would fundamentally rewire our banking and financial system." Well, duh. A CBDC threatens commercial banks. That's why the American Bankers Association doesn't like the idea. This kind of reminds me of way back 100 years ago when the National Association of Horse and Buggy Manufacturers opposed the invention of the automobile. Okay, I made that up. There's no such thing as a National Association of Horse and Buggy Manufacturers. But if there was, they clearly would have opposed the Model T. because it was an existential threat to the horse and buggy business. And crypto is an existential threat to the banking system. Why should anybody other than bankers care? I mean, you really love your bank? You love the limited hours, lousy service, and high fees? I don't think so. Crypto does an end run around all of that, and they have a right to be trying to squash the competition. And guess what? They're going to fail just like those buggy manufacturers failed. I'm Rick Edelman, and that's the truth about their future. Time now for everybody's favorite segment of the program, Visit by my wife, Jean Edelman. Jean is a student of the healing arts, Reiki, traditional Chinese medicine, homeopathy, acupuncture, and of course, macrobiotic and plant-based cooking. Here's Jean.
Great to be with you. It is the month of August, our self-care month. So we're going to talk about food because this is a big piece to our health. Yes, I know food is a part of who we are, our culture, our habits, and we all have relationships with food. I'm going to suggest that we look at adding whole food to our diet. That's lots of vegetables, fruits, lots of legumes, nuts, seeds, things like that. I'm going to suggest that we try to eat 3 meals a day. When we just created this nice morning routine, let's wake up and let's nourish ourselves with some breakfast. Make sure we're making time for lunch and have a nice dinner in the evening. We do want desserts. Desserts we can easily put into our menu because we can substitute the sugar with applesauce, mashed bananas, and dates. So let's make sure that we're planning our meals, and let's make sure that we're eating 3 healthy meals a day with some snacks. Okay, so some quick guidelines. Let's make sure that we're cooking, because when we cook, we're putting our love and our energy into that meal, and everybody benefits from it. The other thing is we want to sit down to eat, and we want to chew our food. Did you know that our digestion starts in our mouth? And so when we chew our food well, then when it gets to our stomach, it's a whole lot easier to digest. I also recommend stop eating 3 hours before you get to bed. So these small changes over time are going to be very beneficial to our health. One last thing, for breakfast, try to eat it no later than 9 a.m. For lunch, try to eat it no later than 1. And then for dinner, no later than 7 o'clock. This way, by the time we get ready for bed, we've digested most of our food. And so, can you guess what my word of the week is going to be? It's going to be food. F is for fresh. We want the freshest possible food on our plate, colorful and a variety. O is for open, allowing change and try something different. The other O is for obtainable, achievable. You know what? We can make these changes. Just make the decision. You can do it. And D is for dawn, the beginning of something new. Today could be the first day of the rest of our life. We can make these changes. We can feel better. We can affect our mood and our health in a positive way. Have a great week, everyone.
If you're enjoying Jean's Words of the Week, you can get a list of them and all of her segments at thetruth.ayf.com.
Need help managing the complexity of income needs in retirement? Meet Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Tell them how much you need and how long you need it to last. They'll estimate how much you can spend. Plus, you can start, stop, or adjust payments anytime without penalty. And with Schwab Intelligent Portfolios, you won't pay an advisory fee. Visit schwab.com/intelligent income to learn more about their modern approach to wealth management.
What do all the greatest innovations have in common? Agents of innovation. Ordinary people who shape the future by putting their money behind the right ideas. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100. So you don't have to be an inventor to help create what's next to come. Be an agent of innovation with Invesco QQQ. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 Index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in the prospectus at Invesco.com. Invesco Distributors, Inc.
Well, that's all the time we've got on The Truth About Your Future this weekend. Remember, sign up for my new master classes. It's online, Financial Planning in the Age of Longevity. In my new master class, you'll discover the truth about your future, starting with the fact that if you're alive in 2030, you'll probably be alive to age 100 and beyond. Will your money last as long as you do? That's what my new master class teaches you at thetruthayf.com. That's thetruthayf.com. See you next week.
Bye-bye.
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 I'm sorry, what? What part didn't you understand? The buh or the bye? Bye-bye.
The Truth About Your Future with Rick Edelman has been brought to you by Bitwise, the world's largest crypto index fund manager. As crypto grows, Bitwise believes everyone should have a simple and familiar way to access it. Bitwise makes crypto clear. BitwiseInvestments.com. And by Global X ETFs. For more than a decade, Global X ETFs has been dedicated to providing investors with unexplored and intelligent solutions. Learn more at globalxetfs.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100. Invesco.com/QQQ. Stay tuned for Everyday Wealth with Soledad O'Brien and Gene Chatsky from Edelman Financial Engines. Everydaywealth.com/radio. EFE and The Truth About Your Future with Rick Edelman are unaffiliated entities.
Get the truth about your future every weekend with Rick Edelman. It's thetruthayf.com.